Today I want to talk to you about the most common financial misunderstanding that every single business owner seems to get wrong. If you've ever looked at your profit and loss statement and seen that you have a profit, but then you're looking at your bank account and you've got no cash in the account and you're wondering where the fuck you went wrong, this is for you. Before I get into it, if you don't know me, my name is Despina. I'm an accountant and a business financial educator, and I've helped hundreds of business owners get their shit in order when it comes to their business and their money. So with that said, I'm going to show you exactly what you need in order for you to keep that money in the account, keep your business growing, and have you hitting all the goals that you want within your business. By the end of this video, you'll understand what profit actually measures and what it doesn't, why cash flow is literally the lifeblood of your business, 3 key reasons why cash flow and profit don't always match, and how to actually read your cash flow so it makes sense to you and you don't get lost in all of the numbers. There are 2 ways in accounting that you report your income and expenses. The first one is accrual and the second is cash basis. What the fuck does that mean, D? I'm gonna explain it. Accrual is when you have invoiced out a job or received a bill to be paid. That is when the income and the expense is recognized. The second is cash basis. Cash is when you've invoiced out the job and gotten paid, so the cash has hit the account, and then you've received a bill and you've paid that bill. So the money has left your account and has entered your account. So that's cash basis. This is the first step of understanding how you are reporting and what your profit is truly telling you based on how you are reporting for accounting purposes. Next, we've got cash flow. Cash flow is the movement of cash. So what comes in and out of your account at any given day, week, month, whatever the time. Now we're going to piece it together and figure out why profit and cash flow don't align. What are the main reasons? So the first one is timing. Let's say you've made a sale, but that sale hasn't hit the account yet, but you've spent everything you need to spend in order to make that sale. So there's going to be some form of discrepancy from your overall profit to what is showing in your bank account because you spent more money but you haven't received the income for it. The second one is investments. So let's say you've gone out and purchased a piece of equipment. That's not going to show up as an expense in your profit and loss. That actually shows up in your balance sheet as an asset. So the overall expense does not reflect on the profit and loss, but the cash has left the account, meaning that the profit and the cash at bank do not align. And the third one is debt repayments. So let's say you've got a loan for that piece of equipment. The frequency of those repayments are not recognized as an expense. Again, because it's on the balance sheet, it's a liability. So profit and loss is income and expenses. Balance sheet is assets and liabilities. So anything that falls into the scope of asset or liability is not going to be shown on the expense worksheet. So this is where that discrepancy between cash at bank and profitability does not always match. So how do you read your cash flow statement? What do you need to look at in order to get this right? So there's 3 main statements. You've got your profit and loss, your cash flow, and your balance sheet. Cash flow is often one that's overlooked, but one thing I do recommend is understanding exactly how much cash moves in and out of your business, because this will give you an idea of what your absolute baseline needs to be for your business to survive and then thrive. So if you don't have enough cash in the account, you're not going to be able to do things that are going to help generate more income, whether that's reinvestment, whether that's a hire, whatever it might look like. The cash in the bank is the thing and the key to driving your business forward. So profitability is actually meaningless if you don't have the cash to be able to continue to grow. I've seen so many businesses profitable but unable to continue to run because they do not have the cash. They're basically running on debt. I want to tell you a story about a client who came to me and we made sure they were cash positive and profitable from the moment they started. The key things we did in order to get that right from the start was firstly set up their bank account so that there was no confusion as to where each spend was going. So their operating expenses were in one account, the capital was in another account, and then all their tax and liabilities was in a third and separate account. I actually have a video explaining exactly how I set this out, so hit the link up there for the full explanation on that. So with this client, we structured his bank accounts correctly so that we could get the cash flow optimal for him to continue to grow without being hindered by the fact that he was in startup phase. Within the first 12 months, he was paying himself a wage and making about 15% in profits, not including his wage. Plus, he hit 6 figures. So 12 months, he achieved some hectic goals, which was amazing. Then in the second year, he had enough cash to be able to reinvest into capital that was going to help generate more income, as well as hire another staff member, which also helped bring in more revenue. So not only did his sales increase and his revenue increase, but also his profitability. Plus, we increased his personal wages. So cash at bank never ever faltered. So within those first 3 years, he was not only able to pay himself, he was able to be profitable, he was able to invest in capital, and he had enough cash in the bank to now invest in his wealth creation activities, which is outside of the business. And I think that is one of the biggest things that we do business for. If you're not thinking about that, then we need to have a chat. So, and I just want to reiterate, the profits he was showing wasn't anything out of the ordinary. It was anywhere between $30,000 to $50,000 depending on the year, but he was still able to utilize the cash and build his profits and the equity within his business in order to generate more income and more wealth for himself. So with that in mind, I want to give you one thing you can take away for today, if anything else. When you're looking at your bank account, when you're looking at your Xero account, whatever your accounting software is, I want you to look at exactly what is going in and exactly what is coming out on month. Write down that number. That number is going to tell you everything you need to know for what your absolute baseline is for your business to survive. So let's say the cash movement on average is about $150,000 a month. Then that's what you need to be coming into your account every single month in order for you to just survive. Understanding your cash flow is understanding the health of your business. Without the cash, you can't do the things that you want to do within your business. I've seen a lot of businesses profitable on paper and still go broke. So understanding the difference between your cash and your profit is essential when it comes to building a business that lasts. We're talking sustainability here. We want you to go the distance so that you can make as much money as you possibly can and retire young, because isn't that the whole plan? Like, that's my plan. If you want me to do more of a breakdown for cash flow, whether it's the reporting, understanding the reporting, anything around this topic, please let me know in the comments and I'm happy to do a more in-depth video. But that's it for today. Thank you so much. And as always, if you loved what you saw, please hit the like button, the subscribe, and I thank you for watching this. Until next time.